Africa's star is not rising, it is shining. Africa has come of age in the area of accelerated economic growth and socio-economic development. 6 of the world's fastest growing economies are in Sub-Saharan Africa. Capital cities across Africa are perpetual construction zones with the buzz of commerce encapsulated in the ever-changing patterns of the city and the vast expanses of urban suburbia. Some countries are welcoming over 1.4 million cross-border visitors a month. And these visitors are in Africa exploring the space for business, for leisure, development, and more. Africa's star is not rising, it is shining. African diaspora remittances topped $60 billion in 2012. And those capital flows continue to rise exponentially. For the first time in history, diaspora remittances have exceeded foreign aid to Africa, which makes African diaspora an enormously powerful stakeholder group in the continuing growth trajectory of the continent. How will Africa capitalize on this enormous investment that bears little risk of capital flight? How do we broaden the investment portfolio of these flows beyond real estate, housing, education, and consumer goods? How do we diversify and deepen the investment into the core sectors of the economy which have historically driven growth and industrial development globally? Employment in Sub-Saharan Africa is a lagging indicator which has not kept pace with GDP growth or any other measure of progressive development. Employment continues to be the most important and pivotal driver of the economy that Africa has to solve for meaningful socio-economic development. How do we succeed in creating massive, broad-based employment that brings all elements of the economy into harmony? How do we replicate the storied growth in GDP in our employment rates? How do we drive and incentivize commercial growth that is in line with the fundamental need for higher employment? There are a multitude of economic growth models that we can and will debate as this dialogue evolves. What we know for a fact is this: there is no single unifying theory of growth and development that will neatly deliver all the public policy outcomes we seek without saddling us with externalities that we outrightly reject. Ultimately, we can only lean on a diversity of solutions that produce a hybrid model of growth and development that is acceptable to most, that primarily delivers accelerated employment as a key deliverable. Just as diaspora investment in Africa made significant strides in 2012, outstripping foreign aid, Africa's capital markets performed exceptionally well, with top equity performers delivering aggressive returns in excess of 100% on numerous African stock exchanges. Some of these top performers include Ghana Oil at 78% ROI, United Bank of Africa, Access Bank, British American Tobacco in Kenya, GSK, GlaxoSmithKline Consumer Goods in Nigeria, Uchumi Supermarket, Kenya, Cadbury, Nigeria, international breweries returning 172%. That's phenomenal growth. Phenomenal growth. It's extraordinary. In the first quarter of 2013, the Nairobi Securities Exchange had a return of 27% on equities, which made it the best performing exchange in the world in Q1. New exchange traded funds, ETFs, focusing exclusively on Africa, are cropping up on the New York Stock Exchange and elsewhere. Mutual funds, private equity investments are on the rise, capitalizing on the growing consumer markets of the various regional trade blocs across the African continent. With this picture in mind, in 2011, the Sub-Saharan Africa Chamber of Commerce initiated a capital markets project to harness and direct African diaspora investment towards African stock exchanges as a socio-economic development policy of choice. When you buy equity stocks, you capitalize a business, which can in turn use that capital to expand its markets, diversify its portfolio, increase manufacturing, increase distribution, and deliver better efficiencies. Those commercial activities in the pursuit of growth require investment in human resources. That creates jobs, employment, higher wages, stronger consumer markets. It creates winners out of everybody. African diaspora investment abroad in the Western Hemisphere is vast and seldom celebrated for its enormous contribution to economic development. Let me say that again. African diaspora investment abroad is vast, and it is seldom celebrated for its enormous contribution to the economic development, period. Think in aggregate terms. Think 401k retirement accounts, IRAs, individual retirement accounts, personal investment accounts through Scottrade, TD Ameritrade, Fidelity, and more. In diversifying African diaspora portfolios, there are enormous opportunities for profitable and coordinated development through investment in Africa's capital markets. Why put all the money in one space? The Sub-Saharan Africa Chamber estimates that in the United States alone, there is at least $9.6 billion a year that is available for additional investment in African portfolios. So there is so much more that the African diaspora is in position to influence progressive, productive, tangible growth on the African continent. If you are informed adequately about what the opportunity is, how safe that opportunity is, what are the risks, what are the rewards, what are the safeguards, what's the regulatory environment, all the things that enable you to make inroads. Where should you invest? What safeguards are in place to protect diaspora investment in Africa? Where do you find dependable market analysis? How do you select reputable and vetted investment brokers to place your trades? What rates of return should you expect from your investments? What are the fundamentals of the companies that are listed on the various exchanges? What are their strategic plans for growth? And how does your capital fit into their capital campaigns? Will your profitable investment drive greater employment, fair wages, good working conditions? Is it safe? Is it a safe bet to bet on Africa? If you are ready to invest in Africa today, how do you get started? These are the questions that the Sub-Saharan Africa Chamber of Commerce is actively working to answer definitively, so that you can decide where to invest with confidence. Contribute to the dialogue, engage in the dialogue on investment in Africa. Tell us what you think. Tell us where you are. Tell us what you would like to see. Tell us the things you'd like to see change. Tell us the things you'd like to see grow. Be engaged so that you have an opportunity to partake in the investment into the space, diversifying your portfolios globally and across the different markets or segments, and at the same time delivering a strong return for yourself while ensuring that there is a positive gain for Africa, where there is no dependency on aid, not necessarily even on trade for that matter, but also a strong contribution coming through investment. If you go on our website, we have a short survey that is anonymous that you can fill out. We would like to get your opinions because your opinions matter in making sure that when we are representing the private sector, we are fighting for the things that the private sector is definitively saying, this is what we want to see in the market. That enables us to have a stronger voice. It enables us to make sure that our voice is right and that, more importantly, our voice represents you and your interests. We encourage you to fill out the survey, tinker around our different sites, whether the website, our Twitter pages and the likes, and our social media outlets, as well as our blogs. Comment, reach out to us, let us know what you think and what it is that you are looking to achieve so we can ensure that there is greater investment going into Africa, such that we can actually see the socio-economic development that we know Africa deserves, Africa wants, and the kind of growth and development that Africa is absolutely ready for today. Who are we? The Sub-Saharan Africa Chamber of Commerce. We are an organization that was started in 2007. We drive trade in both directions across the Atlantic, and we ensure that all of the work that we do is mutually beneficial. Trade, investment, brokering various key transactions, ensuring that we are doing B2B business matchmaking, and more. We are a chamber that ensures that all players are benefiting within the space, and there is, we want to ensure that everyone who is in the transaction is getting a benefit, whether it is on trade or investment. We have a small leadership team, myself, Dr. Christine Madiochola, who's president and co-founder, as well as Irene Mumbi Njoroge, who is chief operating officer and co-founder as well. What do? We provide these services: trade missions, roundtables, conferences. So trade missions, and you've found an opportunity, we make sure that you're able to make inroads into that space. We provide B2B, business-to-business matchmaking. We're able to ensure that you meet all the right partners in order to ensure that you are successful within that market that you're chasing. Informational roundtables and negotiations, if you will, strategic partnerships that we help set up, as well as key sector-specific meetings, ensuring that all the people in the room are focused on one thing, and as such, we can see a larger magnitude of transactions emanating. For the longest time, conversation around Africa has centered on aid. Recently, thanks to so many people who've made that contribution, it has also now started looking at trade. People are now into the slogan of trade versus aid, trade instead of aid. And we're saying there's one more significant variable within that equation that needs to be factored in, and that is investment. Aid has its part. Trade has played a significant part. Investment, we believe, plays an even larger role. In looking at trade flows as a way of developing employment, these are the numbers. 71% of purchasing power resides outside of the United States. 87% of economic growth is outside the borders of the United States. 95% of consumers live outside of the United States. Yet only less than 1% of US businesses are involved in international trade, that is, selling products and services to the 95% of consumers, 87% of growth, 71% of purchasing power. If you're an American business and you are in the 99%, it's a missed opportunity. Ultimately, the numbers also tell us this. If only less than 1% of US companies are involved in international trade, what's the impact of that one of those few companies on job creation? It turns out it's staggering. So 1% of US businesses, because of their exports to other markets globally, can generate in excess of 10 million jobs a year. Let's run that again. 1%, less than 1% of US businesses export to the global market. That less than 1% of US businesses ends up having or contributing to 10.3 million jobs in the United States. Logic would tell us that you export more, that number rises exponentially. That begins the flows of trade and employment within the United States. So trade is an exceptionally important aspect of economic development and growth. These happen to be US numbers. The same is true of African countries who are exporting. Those exports support jobs by the millions. So logic would tell us again, make more product, ship more product, you deliver more jobs, better growth. In practical terms, yes, we know the 10.3 million jobs, but how does it really happen? To give you an example, the South African government, in about 2.5 years ago, the South African government decided that it would put out a tender to buy about 100 to 150 locomotive heads, trains. The companies that ended up bidding were a Japanese company, a German company, a company out of Illinois in the United States, as well as one in Pennsylvania. We were approached by the economic development team in Pennsylvania, as well as the governor's office, to assist in a portion of that bid, to assist a Pennsylvania-based company, GE Locomotives, General Electric, in order to ensure that the bid that is submitted is one that is particularly strong. To the credit of the South African government, from the time that this bid was submitted to the time that the award was announced, there was a change of government, but the process was seamless. What did this trade and investment by South Africa, trade or exports by GE, the United States, what did it mean for everybody? Over 600 jobs were created in the United States. And this was at a plant that was about to lay people off. 1,500 jobs were created in South Africa, final assembly, and more. If you're not doing business at $300 million and above, how do you fit in as a business? How do you fit in as one who is interested in investment? If you can't invest in the companies that are moving $100 million transactions and more, how do you invest in businesses that are actually moving smaller bits? An example in the IT space, ERP systems, enterprise resource planning. If you run a factory, you can't do without it if you want to really get the kind of efficiencies you need. If you run a bank, you need risk management modules. You need all sorts of different modules to run your bank efficiently with the right levels of security. We have helped American businesses who are implementing these SAP systems to actually move into these markets to see what is available. In doing so, we have found that small companies have found that there is an appetite for these kinds of, there's an appetite for American products, and that with these exports, local jobs are created. ERP systems were implemented, for instance, in this case, ERP systems were implemented into Kenya. The folks were so thrilled with the opportunities that existed that they actually created jobs locally in Kenya to actually further that business. Exports between the United States and Africa are at $32 billion. Those are jobs on both ends. How does diaspora investment fit into this picture? And more specifically, the capital market. Not all of us are in a position where we can go and look at a company that we believe we can invest in greater detail, or to invest in certain partnerships that are at startup. And as such, sometimes we need easier investment vehicles through which to make a profit. And capital markets present an enormous opportunity. Investment in Africa is strong. 80 billion in FDI, foreign direct investment. You're finding venture capital firms such as those in South Africa investing over $800 million in a very short period of time in different trade blocks. In this case, in the East African community, right? Because they can see what the kind of growth that the East African community is poised to, that it is poised to explode. And as such, there are consumer markets and so many other sectors that are particularly strong. And guess what? Whether consumer markets, whether it's energy, you name it, there are opportunities there. And there's $800 million of private sector money that is now going into that East African market to make sure that investors can turn a profit. How does the diaspora fit into the picture? Remittances used to be $40 billion. The most recent number as of at the end of 2012, $60 billion of remittances towards Sub-Saharan Africa from global. Nigeria, being a populous country, has the largest share in general, proportionally. Kenya does exceptionally well. South Africa, Sudan, Uganda, Lesotho, and others. Sum total, African diaspora remittances are strong going into the African continent. That's a known fact. And the central banks are doing a reasonably good job of quantifying those numbers in terms of the cash flows that come through. In our analysis as a chamber, we have also found that there is an additional $9.6 billion that is available per year in the United States alone. Again, we were saying, think in aggregate terms. If we are now able to actually invest an additional $9.6 billion, whatever portion of that, into African markets, into African capital markets, you can imagine the kind of growth that you would be able to effect within the African space. Capitalizing a business, which then diversifies its product portfolio, which then expands its which by nature expands its manufacturing, has to increase employment, provide promotions. At the end of the day, you can see those higher revenues and profits translate into higher tax revenues, which translate into more infrastructure development by the governments. It's a picture that is pristine in many ways. There's legacy capital from inheritances that remains in Africa as well-to-do or wealthy diasporans are accessing but not retrieving from Africa. Instead, most Africans are reinvesting those inheritances and those capital gains within the African space itself. So if you have a stock that has a dividend, more often than not, people simply reinvest that dividend. And likewise with so many other different vehicles that are available. So clearly the diaspora, the African diaspora, has a significant role in building Africa even further. The place is a construction zone today, but it looks like there is room for even further growth and development. You look at the stocks from the 30,000-foot view, you can see that if you invested in a South African stock at least on this index, in 2004, you would have been buying the stock at around $15 per share. In 2011, you probably would have been able to sell it at $75. You can see the volume in the graph below is also increasing, which assists with liquidity. Africa has seen enormous performance across different exchanges. Ghana oil, 78% ROI. United Bank of Africa, 78. British American Tobacco in Kenya, 98%. GSK consumer goods in Nigeria, 98%. Uchumi Market is a Kenyan supermarket against the Nakumats of the world, 150%. Cadbury, Nigeria, again 160, and more. Those are phenomenal returns by any stretch of the imagination. And they're in Africa, my friend. They're in Africa. So as African diasporans, as Americans and citizens of the world with an affinity for Africa, there is room to invest in African capital markets, do well while doing good. There are enormous things that are there. The opportunities are fantastic. What are the next actions? We as the Sub-Saharan Africa Chamber of Commerce have taken it upon ourselves to initiate this project of making sure that we can provide you with the best possible information. Gathering best possible information, also having your engagement and involvement so that you can make your contribution, you can make your investments, you can make a profit, and you can invest with confidence. So here, gathering information so we can inform diaspora investors and other investors, institutional and individual, who are looking to do business within the African space, assemble all the key holders, have the data that is relevant for that market to ensure that we are also influencing the kind of policies that should be implemented to ensure that your investment is in the right place and is handled correctly. We're vetting financial institutions, brokerage firms and the likes to ensure that there are vehicles that you can use to make your investment and go to sleep at night. Wake up in the morning, it's a different time zone, and hopefully you've made some money. At the same time, as you're making money, you can see that there is opportunity for additional growth and development that is local. We are here to facilitate transactions, to facilitate the conversation. We are here to represent, to be in the middle, to ensure that we are providing the best possible solutions for all parties involved. So we ask you to get involved. We ask you to get engaged. Challenge some of our hypotheses, challenge some of the things that we're doing, provide advice, provide good ideas, and provide your energy towards ensuring that there is greater investment into Africa that ultimately drives that economy. My friends, it's an exciting time to realize that we are in a seat, in a place where we are driving the growth of Africa. Literally, we are driving the growth of Africa. That is an enormously powerful and important space to be in, because the choices that we then are able to make are the kinds of choices that are good for Africa, but also because we have made a great deal of ourselves within the United States and other countries, we are also vested in making sure that the same decisions are advantageous for the United States and others. They are not mutually exclusive. They can actually be in the same space. You've seen how investment and trade, exports, both can actually drive the kinds of development and growth on both sides of the Atlantic. We have an enormous opportunity to do so much more. We know that investment drives exports, trade, and ultimately delivers jobs. And that is the single most important thing that we need to develop within our spaces in order to drive our continent even further forward. How do you engage with the chamber? Make your voice heard. Tell the stakeholders what you need. tweet, get on our Twitter page, look at the information that we provide, because we provide you what are the best. We tell you what's the best thing, what are the best things that are happening in Africa today in business, and what are the opportunities that exist for you in the future. So you, who is an expert at investing your money, can connect the dots as you see them. Join us so follow us on Twitter, like us on Facebook, engage in the blog, comment, question. We're looking for a dialogue that ensures that Africa is better off and that we are still maintaining the principles that we espouse as folks who have actually made a significant living abroad in all countries. Engage in this conversation. We are easily accessible. We are on Twitter, we're on Facebook, LinkedIn, we're on blogs. You can email us at capmarkets@ssachamber.org. You can tinker around with the rest of our things on our website, and you can call us. We welcome your engagement. This is a time that Africa is poised for enormous growth, and for us, there is an opportunity to be the ones who are providing enormous input, investing in the space, making money along the way, and clearly making a difference. We invite you to join us. And thank you for your time. I'll take your questions.